Good morning, Martin. How are you doing? Also, good morning to our viewers, XM Educational Rooms, and also our viewers on YouTube channel. Here we start the session. How are you doing, Martin?
Hello, Andrew. Hello, everyone. I'm doing well, thank you, and I hope you are well too. Looking forward to a very interesting day, middle of the week. Lots of data. Some data already came from Europe. Interesting data today and yesterday, because we are now in this whole tightening cycle and central banks, debate central banks' actions, and inflation actually seems to be coming down finally. We've been waiting for that. And I'm seeing you are marking manufacturing PMI from China. That's also quite interesting. What is happening in China? I think a little bit of economic problems are boiling there, let's say, or getting more visible. There was talk about Chinese slowdown for quite a long time. It's now everybody is thinking that, okay, what happens if China really slows? And they are doing QE, which is sort of countering the growth, the slowing growth. So for markets and for us, it's from the fundamental perspective quite important. But yeah, lower PMI not very great for the mood, for the sentiment of the market. And what do you see? I think you are on the market from the very morning. What do you see there?
Yeah, so that's affected Aussie and New Zealand dollar. PMI lower second consecutive month, you see, and it's much lower than expected. Forecast, you can check it on event chart or the price chart here. That was from Asian session. The Australia inflation data came in as well. It was 6.8. I think let's check at the medium impact news. Monthly CPI 6.8. Again, event chart. It came higher than expected. And we got some action on Aussie dollar in the view of the two pieces of data they affect Australian dollar. PMI lower means maybe less demand on commodities from Australia into China, talking iron ore, talking minerals. So that was bad news for Aussie. Higher inflation. Sometimes inflation higher than expected produces the uptick on currencies. Currencies got stronger. Sometimes lower. It's not the 100% a cinch that the currency would be stronger because you have higher inflation data. Higher inflation is not pretty picture because if that goes up uncontrolled, it's destabilizing. And if central banks want to conquer inflation, they have to raise rates significantly. In the 6.8% is pretty significant level. If they raise rates significantly, it means the economy might be going into deeper pullback. And overall, that's probably what the market is looking at. And you see that initially, let's go into 5 minutes on the release of data, CPI from Australia, we got a spike up, but then things turn around. And actually, Australian dollar is weaker. There's no buy signal whatsoever, and fundamentals are also getting worse. Data from China, also some recessionary signs from Australia. High inflation together with a slowdown, not a good thing. There is this thing called stagflation in economy when you have a slowdown economy or recession plus inflation. We're not getting yet there, but overall, you see Aussie is going down. Hello, Benjamin. Benjamin is here. I think from a trade, make around 40 euros in morning session. Then after blow it at please, what can I do? Do is read or please advise me like financial management. All right. First of all, this session is not about a financial advice, nor the discretionary management. Those are educational sessions. So we're talking here about markets. We're talking about geopolitics, economic pieces of news. How do we tackle markets? How we approach the markets? But I couldn't give you advice on the buying or selling particular products or your money management. I can give you hints and we can talk about that later. Just the starting session with the review of the market. So Aussie is weaker, New Zealandish is weaker, and that's what's happening. And yesterday, futures on US equities were pointing to higher opening, but see what happens later, higher opening, and then you got the market down, S&P down, and NASDAQ closing higher, however, far away, or 200 points away from the intraday peak, which was at 14,520 more or less. So there was 200 points decline throughout the session. It closed fractionally higher. Right now, market was touching the lows from yesterday. Gold got a rally yesterday. Idea was to sell on the rally. I think it's still a valid idea. Gold was under pressure, got a rally. Idea was to sell at 1960 and rebuy at probably 1940, close short, open long. So we'll be talking about that as well. So market I was looking at was gold. Oil got broken at 70. We were talking about oil yesterday before the US session. There was a very strong momentum on oil at 70, 50 potential break. We traded on the way down, and you see momentum continued. And right now it's around 69. It even went below 69. So something is happening. Copper is going down, oil is going down, equities reversed a bit yesterday, but PMI. What's going to be with the stock market in the United States? Nobody knows, but I tell you, in my opinion, I wouldn't be chasing market. This market is only buy on the dip. When you look at the Dow Jones Industrial, it's actually gradually going down. And those are the markets I'm looking at the moment, though on a daily looks like declining market. So where is the bullishness? Bullishness only observed over the US 100. Big cap stocks are moving that market. Which market are you looking at, Martin?
Well, I'm definitely looking at US 100 because it was pretty crazy, pretty decisive, so exactly as I like it. But I'm now looking at it, as a potential turning point. So basically, what just happened is that Nasdaq lost the momentum at the very top, and so I'm looking where the market will decide to go next. Hopefully, they're gonna move higher a little bit, but they are almost vertical at the moment. So that's the situation that you probably don't want to chase, and probably still too early to short. So it will take some time. So I'm watching it closely, but I think some opportunities were there and will be there. So it's on my watch list currently. What I'm also looking at are yen currency pairs. They are pretty volatile, and I think they are fairly readable. So I like those situations. I'm looking at the dollar, which is coming back. Well, it's a little bit advanced already. So tracking that. Gold is trading nicely, a little bit to the downside, but with those ranging periods. So also you could make some trades and shorter term trades. So US dollar comeback is sort of a medium term, let's say, or not very short term sort of idea. If we talk about gold, it provides some nice volatility every day. So pretty much every day. So now I'm looking at gold every day, basically. And there is not much more. I think GBPUSD and Euro USD are not so great. I mean, GBPUSD tends to do some strange things, so I'm not a fan of it. I mean, could find better assets to trade, so I want to commit on assets that I find more convincing. But I'm seeing you had some very nice trades, so congratulations on those. On GBPUSD, very nice. And
that's continuation of the selling from 25 zone of resistance. Yesterday, we were talking about that. Actually, in the beginning of the week, we were talking about selling the rally. And yesterday, we got the very nice level here. That was the shooting star here. So prices revisited that level. And we got the session. And I was saying there was no point to be exuberant about the pound not chasing. Like you wouldn't like to chase the markets, US markets. I mean, there's nothing very positive about pound, and we just get this natural rally, and prices are coming back where they started. Euro, as you see, was even making new lows. So yesterday rally completely faded. You actually have a new low on euro. So you see, the strategy here is buy new lows if somebody go for long, not chasing the market. If you chase the markets, the risk is that you are buying the rally, and the rally is fading into new lows. So you have to patiently wait for new lows. If you want to buy on the intraday bounces, you are trying to buy on the new lows. Or when those lows are established, your prices start to reverse. You see very nice hammer yesterday formed after declines. And that hammer was a one candle formation here on the 1 hour that actually gave you a nice buy signal, which lasted only 4 hours. But it was a nice movement around 50 pips, after which the prices continue falling.
GBPN looks like testing the resistance now, and it's quite important resistance, I would say. Sorry, support. Resistance as well. I mean, resistance is yesterday's and before yesterday's low, and the support is high from last 2 weeks. So it feels like if they break it to the downside, it would be pretty bearish, and we could go quite some pips to the downside. If they manage to defend it and give some bullishness, it could be another swing to the upside with the trend in order to continue. So GBPN, I would watch closely as well, of course, together with other yens.
Yeah, so when euro is making new lows, you might be thinking maybe pound is going to make new lows. Possible scenario. Still, you are not close to the long-term support, which is around 119, and also the mid of the range, which is around 120 to 50 more or less. So maybe 123. So still, there is some room to go into equilibrium when you look at that chart. At the best, GBPUSD is consolidating. I wouldn't call it bullish. Actually, bearish pressure in short-term intervals pervades. So maybe that will continue like euro did and making the new intraday lows. And again, buying on new lows is the strategy, or close to the previous lows might be the strategy intraday. Of course, hit and run market. If you're intraday buying, know that this is the declining market. So if there is a rally, take your pips and go away, wait for the pullback, or wait for the consolidation. Give it some time. After that moves nicely to the upside for no reason, it might be just a rally. Benjamin is saying that he used pivot strategy, and about those comments about the grid. You know, psychology is important. You know, you have to observe yourself, definitely. Risk management, psychology, those are broader themes to discuss. Definitely one of the things I can say, it's important to hold on to winners and get rid of losers fast, not doing the opposite. Many people got problem accepting loss, but loss is a part of the game. You have to keep on keeping winning trades, get rid of the losing trades. If idea doesn't work out, it means that a market confirms that it means you have to get out from those losing positions, because those losses might be accumulated. You want to accumulate profits, not losses. All right.
Well, it's it's a little bit. It's an interesting case. I mean, I would like to hint something valuable to Benjamin, but I won't comment on the pivot strategy, because it's like whatever works for you, right? The question is the strategy. Is the problem with the strategy, like, why did you lose what you earned, right? So first of all, What I'm reading from your comment, I don't know what's 40 euros for you. How many pips, and was that how much you risked as well? For one person, 40 euro will be 4 pips. For another person, will be 100 pips, and so on. Some people are making 40 euros 4 days, or 100 pips.